Okay, you see it once again today. The Dow is down. Trump tariffs creating uncertainty amidst investors. Well, we did get a little bit of a silver lining. You also see that on your screen. Some new data showing inflation slowed in February. So prices jumped lower than economists expected. So here are the numbers here behind me. Prices up 2.8% from a year ago and 0.2% from the month of January. Again, to you at home, that feels like a bleed, but it is a slower bleed than economists expected. However, we know that millions of you at home feel that squeeze in your wallet every time you gas up your car, pay your electric bill, or try to buy eggs at the grocery store. Now, at the same time, President Trump's latest tariffs on steel and aluminum kicked in today, threatening to push prices higher on everything, from cars to the cans that you drink out of for your soda. The European Union slapped tariffs right back on the United States, targeting everything from American farm products to motorcycles, bourbon, peanut butter, and jeans. Canada also vowed to retaliate with more than $20 billion in tariffs on the U.S. So let's break down the impact to your wallet. We, of course, have on CBS News 24/7 on the political side, Natalie Brand. She's live at the White House, and Money Watch correspondent Kelly O'Grady here to talk dollars and cents. So, Kelly, let's start with you. I anticipate the people watching from home hope that today's inflation data really calms the storm, maybe balancing out some of what we're seeing on Wall Street. What are you seeing?
So we actually started the day in the green, very much in the green on all three major indexes. I've got the Dow in front of me right now. It is down, the other two up. But yes, I do think that this report gives investors a little bit of a sigh of relief. And I know that it still means that prices are rising. They're just not rising as quickly as we had seen before. Because remember, we had 4 months in a row leading up to the CPI report where we saw prices or inflation increase faster than it had been. We were getting further and further away from the Federal Reserve's 2% target. So we went from 3% last month to 2.8%. Again, not a huge jump, but it gives investors a sigh of relief because we are looking ahead to tariffs, even more potential tariffs. And the thought process is, well, that's going to increase prices further. So if we can kind of get this inflation that currently exists in the economy under control, then the inflation would be coming from the tariffs. And so I think that's where you're seeing a little bit of a sigh of relief that we're moving in the right direction, that maybe we won't have the problem of stagflation, which is basically slowing growth but increasing inflation. Again, I know at home I don't want to downplay this. Prices are still rising, but it was just sort of a little bit of a bright spot in what has definitely been a murky 2 weeks read.
Well, and we'll take any bright spot we can get, Kelly, because as you've taught me, the people who adjust interest rates up or down, the Fed looks at the inflation rates as well. There is some connectivity there because that's the reality. But also another reality is the fact that both Canada and the EU promising to slap tariffs on American goods in response to Mr. Trump's tariff. So what does that retaliation mean for those of us who are gassing up our cars or buying eggs at the grocery store?
So the retaliatory tariffs are really going to hit businesses the most because, you know, the peanut butter, the Harley Davidsons, the jeans, those are businesses wanting to sell products into European countries or Canadian countries. And basically what that means is it makes it more expensive for Canada and the EU to import those products from the United States. So that's really going to hit businesses hard. Where it could mean for us consumers is that we have seen the president, when retaliatory tariffs have been slapped on us, then escalate things even further. And so when you start to see this trade war go back and forth, that's when you'll feel more of that pain at home as a consumer.
Kelly O'Grady, thank you so much for watching it. We know you've been working double time these days. Have a good day, my friend. So now let's talk to Natalie Brand. She spoke to the CEO of the National Association of Home Builders. We know a lot of building supplies come from Canada. What did you learn?
Hi, Reed. Good to be with you. Well, he says they're kind of in wait-and-see mode right now and that they don't like tariffs, but it's still not clear what the exact impact will be and how long it will take to feel that. Now, of course, the administration arguing that this move, new tariffs on all imported steel and aluminum, will spur U.S. domestic production of those metals, which the home builders say that would be be a good thing, but it could still take years to scale up. So in the short term, they are expecting increase in costs. I asked Jim Tobin how he believes that will impact the consumer. Take a listen.
Tariffs actually have an impact on the cost to build construction. If building material prices go up due to tariffs, then we're absolutely going to see those prices have to be absorbed somewhere, whether it's by the builder, which erodes their margins, or what likely is going to happen, that's going to be built into the price of a home, and we'll see home prices begin to escalate as the tariffs start to bite. We've seen some estimates that say that it could be up to $10,000 per home that these tariffs could increase the cost. But we're waiting to see. It's still going to be months before these tariffs truly find their bite and we see the impact. So we're going to wait and see, and we'll be able to know over the next couple of months.
And of course, he's talking about new construction and homes. But as you were talking about with Kelly Reed, there's estimates that costs will also increase significantly, potentially in the auto industry. And of course, anything that deals with steel or aluminum, such as soda cans, electrical companies, you name it.
Well, and so let's talk about those, because we do know the EU and Canada are responding to those steel tariffs. We expect the issue to come up today during Mr. Trump's meeting with the Irish leader Micheál Martin. So what's happening right now in that meeting? What's their agenda?
Yeah, that meeting is now underway, and the pool of reporters was let inside, for what's known as a pool spray. A number of questions are being asked about these tariffs, the retaliatory tariffs. The position from the White House and from the president is that the United States has been unfairly taken advantage of by the EU and other countries. So we know that is going to be a topic that's under discussion today between these two leaders. As well as their economic partnership, because keep in mind, Reed, a number of big U.S. multinational companies have a presence in Ireland. So, there's a sense from the Irish that these economies are intertwined. I do want to read to you a statement from the U.S. Trade Representative about the retaliatory tariffs from the EU. It basically slamming the punitive actions. It says completely disregards the national security imperatives of the United States. And so that is the position, from the administration, that this is an unfair, punitive measure. They say it's an indicator that the EU's trade and economic policies are out of step with reality, according to the White House. But this meeting comes at this very unique time, just hours after the EU slapped on these retaliatory tariffs. We know Ukraine is also expected to come up. That is something that was also brought up with the breakfast with Vice President J.D. Vance earlier today. The ceasefire deal that's under negotiation, being led by the White House between Ukraine and Russia. And then, interestingly enough, Reed, Vice President Vance noted that one area where these two countries could really work together in the future is on tech and AI. He said he wanted to see more focus on that.
Well, Natalie, with you at the White House, another thing that's top of mind is remembering that President Trump told Education Secretary Linda McMahon, especially during the confirmation hearings, to work herself out of a job. I've got to ask you about the Department of Education. It appears they are moving ahead with layoffs, 50% of the staff reportedly cut. So this morning, a lot of critics that I'm hearing from call it a complete dismantling in an arena where many say this has to happen by an act of Congress. What are you hearing there from the executive branch?
Yeah, and it sounds, according from the notes from the pool reporters, the president was asked about this and again pointed to trying to give the states more control over education and again moving to try to cut employees that the administration believes, are not needed, or in the president's words, may not be showing up to work. But the reality of this situation is slashing the Department of Education by nearly half. There's a lot of questions about how that will impact the work that the Department of Education does. You know, it enforces non-discrimination policies, distributes a lot of federal aid. So this was already a very small department of a little bit more than 4,100 people. So now you're going to nearly half of that. Of course, as you noted, it would take Congress getting involved to completely shutter the Department of Education. We also know the White House was kind of preparing an executive order along those lines. That has not been signed yet because, again, this would require congressional approval. But as far as what the administration can do to kind of, gut this department, I think that's what we are seeing now. Although it is important to point out, Reed, while a lot of the impacts are unknown, Secretary McMahon noted and told lawmakers that the department will continue to deliver on programs in statute, including student loans, Pell Grants, funding for special needs students, and things along those lines that are mandated and appropriated by Congress, Reed.
Natalie Brand, CBS News correspondent, thank you so much. It's always great to have you on CBS News 24/7. I hope to see you back here soon.